Hello guys and welcome again to my channel. So, pardon me, forgive me. I am on my home clothes. I just don't want to be lazy today, so I have to take this. The good thing is that I took a bath, so that's a good thing. So, let's start with our session for today. So, in the past video, I have introduced you with this comprehensive problem related to merchandise entities accounting. Okay? So, this is the problem. Again, they have their trial balance as at November 30, 20x5. However, there are transactions for December 20x5. So we interpreted this and this is our output. Actually, in the past video, we have already done the step 1 and step 2 of the accounting cycle. Step 1 is identification of transactions and journalizing of transactions. So this is the output of that. So before we move to step three is about these entries being posted to the ledger or the T accounts. So we're not going there yet. It's because we have to make entries for adjustments. Although these adjustments are necessary only in the completing the worksheet, which is step 5 of the accounting cycle, if ever you still remember. And step 7, in which the adjusting entries are, what do you call this, journalized and posted to the ledger. So this is only uh, important on step 5 and step 7. But still, we have to make entries already here. Okay? So for the adjustments, we have number 1, unpaid salaries of 73,000 was accrued at the end of December. So that means if we're going to make an entry about that, we will have, let's subdivide this blackboard. Okay, so this is for the adjustments here. So the entry would have been accrual of salaries. That means you have already used the services of your employees. You have not paid yet their salaries. So debit salaries or salaries expense. I don't know what is the account title that we have used here. We have, where's the, do we have salaries? Yeah, salaries expense. So we use salaries expense and credit salaries payable. I don't know also if we have salaries payable here. If we don't have, then we are going to add it. There is only loans payable here. So we have to add another account title here, salaries payable, although it's already in the last part. Because you cannot use any account title in the journals in here, as well as on the adjusting entries and other entries if they are not on the chart of accounts. Okay? So we have, again, salaries expense, salaries payable. So it's quite difficult to determine by using these arrows the entry. So we have to put here number symbol number 1, adjusting entry number 1. Okay, we have adjusting entry number 2. The adjusting entry number 2, it just said that the expired insurance is 2,000. So as you can see here, we have insurance advances 48,000. So that means we paid for the insurance advances for 48,000. It was not yet used, but at the end of December, 2,000 has already expired. Okay? So we have to make an entry about that. So let's have an entry closer. Number 2. What will be the entry? Of course, we have insurance expense 2,000. And then credit insurance advances. That's entry number 2. Okay? So, as you can see, the company might be using the asset method for recording deferred expenses. Why? Because in here we have insurance advances or prepaid insurance, 48,000. If the company is using expense method, this should have been insurance expense. Alright? Okay. So if you wanted to know more about adjustments and the methods of recording the deferred expenses and the deferred revenues, you can take a look at this particular series still. There is an episode dedicated to that for adjustments. Okay? So let's move forward. So we have depreciation on building and equipment, 3,000 and 4,500. So should make an entry for this. Name it number 3. So on the number 3, you just have to record depreciation expense. No need to compute because it has been computed for you. The whole depreciation expense is 7,500, 3,000 for the building, and 3,000 and 4,500 for equipment. So let's use accumulated depreciation, but this is for the building, 3,000, and another account, accumulated depreciation for equipment. How much? 4,500. So why did we separate? Of course, you can already see here in the trial balance that they are separating the accumulated depreciation for the building and accumulated depreciation for the equipment. So we have to record this. Okay? So number 4, the supplies on hand is 7,000. So what will be the entry for that? So the supplies we have here 3,000 for the supply, 31,000, I guess. That's 31,000 supplies. And we did not have any particular transaction here pertaining to supplies. We have our clients, our client Baby G supplies, but we did not actually have a purchase during December of anything related to supplies. Am I right? I guess so. I have not remembered anything. Most of the transactions here are about purchases of inventories and selling of inventories. So I guess we did not have any entries for supplies. So the supplies that we're going to consider is the 31,000. And since the supplies on hand is only 7,000, so 31 minus 7, it's 24,000 has already been used, if I'm not mistaken. Yeah, 24,000. So we will have an entry, 4,000. Oh, adjustment number 4, supplies expense. So 31 minus 7 is 24,000. And then credit supplies, 24,000. That's it for the supplies. Last, so you have to pay attention to this one. Sorry, I'm really sweaty. It's really hot in here. So we have number 5. The inventory on hand is 453,000. So this is a bit tricky. We have to make an entry for this one. So this is the unique one. You have to focus on this one. So personally, my entry will be, if there is something like that, I'm going to establish merchandise inventory beginning, because this will be used debit in the income statement. So merchandise inventory beginning in the income statement, it will be used in order to compute for the cost of sales. So merchandise inventory beginning is actually 426,000. Okay? And then I'm going to establish also merchandise inventory and credit on the, not on the balance sheet, it's still in the income statement. But in this case, we have 453,000. So, those are on the IS. Sir, it's not balanced. The entry is not balanced. You have debited for 26,000 and you have merchandise inventory and income statement 453,000. So, what will be your balancing figure? The balancing figure will be, let me raise this a bit, the supplies. So, number 4, let's make it smaller. Supplies expense 24,000 and then supplies 24,000. So you have 426, 453. The other debit is still merchandise inventory. Okay, let's go back again. Somebody called, which is why I stopped the video. So again, you have to focus here because this is unique. So if there is an adjusting entry like this or adjusting transaction like this, inventory on hand is 453,000. Here is the unique entry that I have. So first off, I recognize the merchandise inventory beginning on the income statement. I put that on the debit because the normal balance of merchandise inventory beginning in the income statement, particularly in computing for cost of sales, is actually debit. So we have 426,000. And also, part of the income statement also is the merchandise inventory end in the computation of the cost of sales. So, the normal balance of that merchandise inventory ending is 400. Is normal balance is 400. The normal balance is actually credit. So, you have to establish that. Okay? It's because when computing for the cost of sales, if you still remember, the merchandise inventory beginning is added. So meaning the higher the merchandise inventory beginning balance, the cost of sales will become higher also. And since the cost of sales is somewhat like an expense, the normal balance of cost of sales is debit. So merchandise inventory beginning is also debit. Okay? Because when merchandise inventory beginning again increases, the cost of sales also increases. Okay? So that is contrast with the merchandise inventory end. The merchandise inventory and the higher the merchandise inventory end, then the cost of sales will drop. Okay? So, you have to establish those. So, that is the unique one here. Because this one is logical actually. The balancing figure of, how much is the balancing figure? I guess that's what we have. That's 27,000. Why do I say that that is logical? It's because this 426,000, when you add 27,000, it becomes 453,000, which is the appropriate balance already at December 31 or at the end of the period in this particular problem. So this is very much logical. So what's unique? These two. So merchandise inventory is not only an asset in the merchandising entities accounting cycle. It is also part of the income statement. Both the merchandise inventory beginning debit and the merchandise inventory ending credit. Okay? Now, that's how I make my entry. However, in some other authors, instead of establishing merchandise inventory beginning and credit merchandise inventory end, what they do is they summarize this one. Of course, if credits minus debits, it's 27. Instead of having this entry, they're going to put merchandise inventory, balance sheet, 27,000. Credit, cost of sales, 27,000. The summary of these two, they are to credit it immediately to cost of sales. So, it's up to you. But for me, I guess I like this as an entry for this particular adjusting transaction. Okay? Now, before we go to the step 3, I have to label the entries here. So we have here, this is the entry for December 1. This is for the entry for the transaction 2. This is 4. I guess. This is the entry for December 5. This is the entry for December 6. This is the entry for December 9. This is the entry for December 10. The entry for 11. The entry for, yeah, the entry for 12 here. The entry for 18. The entry for 19. Yep, 19. And then the entry for 19. Oh no, it's not here. It's here. 19. The entry for number 20. The entry for number 29. Yeah, this is returns here. And the entry for December 30. Yeah. So why did I do that? Because in going to step 3, we have to erase something in the whiteboard. Okay? Now, before we go to the step 3, again, I have something to give you. When I was in college, I usually go for journal entries plus adjusting entries immediately. Even if the adjusting entries are again used in subsequent steps pa. Like it is needed in the completion of worksheet and it is needed on the step 7 in which the adjusting entries are journalized and posted to the ledger. Why is it that I incorporate already the adjusting entries immediately after I journalize the regular transactions? It is because in this phase, you have to analyze. So analysis is very much needed in this phase, the making of adjusting entries and the making of the journal entries. Why is it that I have to finish this? Because the next particular steps, the other steps, after these two, does not need analysis anymore. You just need to follow processes. So procedural in nature already. Okay? Which is why I do this first. Because my focus is greater at the very beginning. And on the subsequent steps, since they are already procedural, my focus is only on how to not mess it up. Right? So no analysis, just following the procedures already. So step 3 is procedural in nature. Okay? And since I wanted to let you look at the whole picture, we are going to economize again the space. So I'm going to delete up to here so that we can make some T accounts. Right? Yeah. So let's economize the space and use this for the T accounts. I don't know if it will fit. I guess it will. Let's try. So step 3, we're going to post this particular entries right here. We are not going to post this adjusting entries first. Okay? Step 3 is all about posting the journal entries for regular transactions. Okay? And since this particular problem has beginning balances already, so we have to consider those also. Like for example, if we talk about cash, there is 229,000 already. Actually, you have to make the T accounts for this first. These accounts that has balances. Like AR, I'm gonna have to put a T account for the accounts receivable immediately. So we have 338,000 debit. But before you do this, you have to make sure that the debits is really equivalent to credits. Otherwise, you'll mess your worksheet later on, or the unadjusted trial balances that you are going to make. Okay? So I've checked this. It checks out. The debits are actually equal to credits. So let's post it. Let's post it already. And when we talk about merchandise inventory, I will just shortcut it. We have 426,000, and we have supplies. We have 31,000 debit, and we have insurance advances. Insurance advances. Insurance advances is 48,000. And we have land. I guess it will not fit, but let's go on. You have 370,000. You have office building. The office building is 900,000. Guess that's for the assets. We have the credits here. Let's put the credits here. After the office building, we have the accumulated depreciation building. And that is 250 on the credit side. And then, let's make it smaller. And then we have the accumulated depreciation for equipment. Oh no, we have to put here first the equipment. So we have RT account for equipment. If you cannot see it because I'm a big baby, you just have to follow what I'm voicing out. So equipment is 800,000. And then accumulated depreciation equipment, that's 200,000. And then the other credits are the accounts payable. Let's shortcut it. So we have 172,000. And the other one is the loans payable, LP. So 1,200,000. And the equity is 1,320,000. So you have to do that first. Why? Because not all of those accounts are used in December. Actually, if you notice here, not all of these accounts were used. So if you are going to ignore the beginning balances, for example, like you will not post it immediately, what will happen is that, for example, there is an entry for cash. That's the time that you're going to put the beginning amounts. You might not include the other accounts that were not used in December because you're focusing on what was used. Okay? So again, if you have to be very, very procedural here so that you'll arrive at the correct balances, you start with posting the beginning balances of each of the account titles. Okay? Before going through here, before posting the current entries. So, that's it. Now, let's have an entry for December 1. So, we have accounts payable. There is already an account for accounts payable, 115,000 debit. And the cash is 112,700 credit. And the purchase discount. So, again, what is the normal balance of purchase discount? That is on credit. So, we have to line them up here. Purchase discount. The purchase discount is 2,300. Okay. So that means this has been entered, posted in the accounts. Let's go to number 2. We have sales discount. So since that is on the debit, let's make another T account here. Sales discount. Yeah. So that is a debit of 5,400. And then we have a debit cash 174 600. And then you have to credit accounts receivable of 180,000. So if that has been perfectly posted, I guess it is debit, and then credit. So this is already done. That's it. It's very procedural. You just have to be very attentive on what you post. Okay? Where is the next one is this December 4. You have accounts receivable 210. It's on the debit, right? And then credit sales. Since we don't have any sales yet, let's put on sales. The sales is 210,000. So this has been posted. And then we have freight out. So freight out is transportation out. That is a member of the debits. So let's put here freight out. Okay? Freight out is 3,000. You have to debit it. However, you have to credit the accounts receivable. So no need to analyze. You just post. Okay? Okay. So I have to be careful because no one will correct me if ever. And next is we have sales returns and allowances. So on the sales returns and allowances, that is on the debit side. Sales returns and allowances is 25,000. Again, that is on the debit side because it is its normal balance. Although they are very much related with sales, they are contra sales. So if you have sales on the credit, these sales returns and allowances and sales discounts are the contra of the sales. Okay? Accounts receivable, 25,000. Yun. So this is done. This is done. How about number 6? We have purchases, 232, and accounts payable, 232. So where's the purchases? We don't have any yet, right? But the purchases should be on the debit side. So purchases is 232,000 and the accounts payable is 232. Okay, again, we have to economize the space because it's what's needed for answering a comprehensive problem. Okay? Um, I'm wet. I'm wet with sweat. So 232,000. Let me see if it's recording still. So purchases 232,000 and then accounts payable 232,000. So it's done. And then we have freight in. So that is on the debit. Freight in. 2,000 and then credit cash 2,000. As long as you're not absent-minded, you'll be able to do this perfectly. So 6. Let's go to 9. We have accounts payable 12,000. Debit. So put that on the debit and then the purchase returns and allowances. It's the same with purchase discounts. It's on the credit side. Purchase returns and allowances. Because again, purchases is on the debit side because it increases the cost of sales. Cost of sales is an expense type as if. So their normal balance is debit. So whatever account that increases the cost of sales, then that means they are on the debit also, just like the cost of sales. So the purchase discounts and purchase returns and allowances, when their amounts gets higher, the net purchases and ultimately the cost of sales will decrease. Okay? Because they are contra purchases, the purchase discount and purchase returns and allowances. And if they are contra of a debit account, then they are credits. Okay? Simple as that. So purchase returns and allowances. Where's that? Here. 12,000. Purchase returns and allowances. 12,000. Accounts payable. Debit. 12,000. Okay. So this is done. And this is done. Let's have number 10. We have interest expense, credit cash. So we don't have any account for interest expense yet. So let's make one on the debit. So interest expense is 8,000. And then the cash is 8,000. Next. So this is done. Let's go to December 11. The cash is 176,450. 176,450. Okay. And after that, we have sales discount, which is also on the debit side. This is a contra sales account. That is why that is on the debit. So we have 5,550. And the accounts receivable is 182,000 credit. 182,000 credit. So that's it. Done, done, done. Let's have, where is the next one? Yeah. The next one is, I guess, this accounts receivable credit sales. Let's do that one first. The number 12. So, accounts receivable, 330,000. And then sales, 330,000. The gross sales. So, this is done. And this is done. Let's go to number 18. Number 18 is debit cash, 320,100. And then the sales discount is 9,900. And then the accounts receivable is less than, is credited, is decreased by 330,000 as if this is cancelled. So, okay. Let's go to 19. You have another 242,000 debit, and then credit sales 242,000. Okay. Still on number 19, we have another accounts receivable here on the debit. Let's put it here. There's no space. Let's economize everything. We have credit cash 5,000. That's it. Next is we have, this one, representation expense and credit cash. So since we don't have any representation expense yet, representation expense, 9,000. And then credit cash, 9,000. Yeah, that's it for this one. Another is we have sales returns and allowances. Again, this is on number 29. So, sales returns and allowances. Do we have that? Yeah, we have. So, we have 18,000 right here. And the accounts receivable is credit 18,000. Here. Yep. So, this is done. This is also done. Lastly, we have on the 30th, December 30th, we have Glet's drawing, 20,000. So, we don't have any debits for that yet. Let's drawing, 20,000. And then my credit is merchandise inventory, 20,000. But then again, that is, what do we call this? This is, this is actually an adjusting entry later. I guess it's much better that instead of crediting merchandise inventory, let's use purchases. Let's credit the purchases because it's as if that this purchases 232 is for the company. However, the 20,000 was taken by the owner. So as if we deduct the 20,000 here, only 212,000 are the purchases meant for the business, as if, and the 20,000 is meant for the owner himself. Okay? So that's our analysis. So instead of crediting merchandise inventory, let's credit purchases. Okay? So we have posted already everything. However, I wanted to know if everything is in place. The posting is good. How do we do that? We have to get the balances of each of the account. So let me have my own calculator. I bought my calculator finally. So let's start with cash. So 229,000. You can join me. 229,000 plus 174,600 plus 176,450 plus 320,100 equals 900,150. And then 112,700 plus 2,000 plus 8,000 plus 5,000 plus 9,000 is 136,700. 136,700 on the credit side. So that means the cash balance is 900,150 minus 136,700. We have a cash of 763,450. 763,450. Let's make a circle for that so that we'll be able to determine which is the debit, which is the credit. The sales discount is 5,400. The freight out is, of course, 3,000. Let's encircle. Also, we have accounts receivable. We have 338,000 plus 210,000 plus 5,000 plus 330,000 plus 242,000, 1,125,000. 1,125,000. How about on the credit side? We have 180,000 plus 3,000 plus 25,000 plus 182,000 plus 330,000 plus 18,000. And we have 738 on the credit. So 1,125 minus 738,000, you'll have 387,000. 387. No, 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 no. Remember, your penmanship is very important. Otherwise, you'll not be able to balance everything if you don't understand your penmanship. So you have, for sales returns and allowances, you have 25,000 plus 18,000. We have 43,000 here. On the merchandise inventory, it's still at 426,000. On the purchases, again, it is 232. However, since the 20,000 was taken out by the owner, it becomes 212,000. And then the supplies is 31,000 still. The beginning balance. The freight in is 2,000. The insurance advances is still at 48,000. The, what is this? Interest expense. I guess this is interest expense. 8,000. The land is still at 370,000. The office building is 900,000. The equipment, it's 800,000. And 5550 plus 9,900 is 15,450. The representation expense is 9,000 still. The let's drawing is 20,000. Okay? So those are the debits. Let's get the total balance of the debits. 763,450 plus 387,000 plus 426,000. I'm starting with the first column. Plus 31,000 plus 48,000 plus 370,000 plus 900,000 plus 800,000. Okay. And then plus 54, second column, plus 3,000 plus 43,000 plus 212,000 plus 2,000 plus 8,000 plus 15,450 plus 9,000 plus 20. Okay. The calculator reached its point. So plus 9,000 plus 20,000. So very carefully added, we have the total debits at 4,043,300. Whew! Why is it that I am really taking to taking this step by step? Because if you wanted to practice, you can have the comprehensive problem and then do not look at how I solved it. Solve it on your own. So you'll be able to have your answer key already in our video. Okay? So let's go to credits. On the credits, we have 250,000 here. Square. Let's put on square. We have 200,000. Let's put on square. The accounts payable. You start with 172,000 plus 232,000 minus 115,000 minus 12,000, 277. So it's on credit 277. This is still 1.2. This is still 1,320. This is still 2,300. Oh, let's add the sales. The sales is 210 plus 330,000 plus 242,000. This is 782. I hope we get it. 782. And the purchase returns and allowances is finally 12,000. Let's check if the credits are also 4,043,300. So let's start with 12,000 plus 782 plus 23 plus 1,320 plus 12 or 1,200,000 plus 277,000 plus 200,000 plus 250,000. Yes, we got it. 4,043,300. So basically, the accounting for service entities and the accounting for merchandise entities, when it comes to posting, they're very much the same. The same process. Okay? So I'll cut this video now. Next video, we're going to make an adjusted trial balance out of this totals in our ledgers. So this is already step 3. Okay? And we're going to go until step 10 because I guess you wanted it. I don't know. But I'm going to assume that you wanted it. So we're going to go to until step 10. Okay? So thank you for watching and see you on my next one.